is insulting, considering the atrocities that they have committed against our people and our military over the past 5 decades. John, go ahead.
Thanks a lot, Caroline. 2 questions for you. One has to do with a joint statement put out this morning by some of America's European allies, our NATO allies. And in that joint statement, they said regarding the Strait of Hormuz, our governments will contribute to ensuring freedom of navigation in the Strait of Hormuz. What's the administration's reaction to that joint statement? Does that smooth things over when the president meets with NATO Secretary General a little bit later this afternoon?
I have a direct quote from the President of the United States on NATO, and I will share it with all of you. They were tested and they failed. And I would add, it's quite sad that NATO turned their backs on the American people over the course of the last 6 weeks, when it's the American people who have been funding their defense. As you know, President Trump will be meeting with Secretary Rutte in a couple of hours here at the White House, and I know he looks forward to having a very frank and candid conversation with him.
And then secondly, in regards to this conflict, 38 days, as you pointed out, President Trump has said that there's been regime change. Has that regime change led to more freedoms for the Iranian people?
I think that's a question that's being asked a little bit too early, John, and we hope that is the case, but it's something that has yet to be seen. Eamon.
Caroline, on this question of tolling by the Iranians in the Strait of Hormuz, I've heard you talk about a number of red lines that the president has in this negotiation, but I haven't heard you say that Iranian tolling in the Strait of Hormuz is a red line. Would it be acceptable to the United States at the end of all this if the Iranians are able to charge tolls in the Strait of Hormuz?
I think the president was very clear and simplistic in his language last night in his Truth Social post, where he said that this ceasefire is subject to the free, safe, and immediate reopening of the Strait of Hormuz. That's very plain language, and it should be taken at face value.
You mean free charge?
Carrie, go ahead. Without limitation, including tolls, yes. Carrie.
Quick follow-up on the tolling. Why would the U.S. allow Iran to collect tolls from the Strait of Hormuz? That's not something that we've opposed for a number of years now.
Again, that's not something we've said that we've definitively accepted. The joint venture is something that was proposed by the president, but he was very clear in his statement last night. He wants to see the strait reopened immediately without limitation, and that's something we're going to hold them to.
Yes, second question
on family and friends in Iran. I myself am Iranian, and I've been talking to them through the blackout. One of my family members yesterday said goodbye to me. So what message should we be sending Iranians when they message me saying what should they be doing right now? How should they stay safe? Because they really don't know what to do.
I think the president's main priority, and my main priority as his spokeswoman, is to make sure that clear messages are sent to the American people, of course, which is my job today. With respect to the Iranian people, the president, has taken out the imminent threat that was posed by their military to the United States, to our allies in the region, to our forces in the region, and of course, as the president has long said, he hopes that Iran will be a country of peace, of prosperity, and we're moving into this next round of negotiations to hopefully come to an agreement with this new regime that will create long-term stability in the Middle East.
He has said that they should stay inside of their homes and also take back their country. So there's a contradiction there. So how do you address that?
Again, we're moving into this next round of negotiations with the remnants of the regime and those that we are speaking with now to hopefully reach a place of peace long-term for the region, and that includes the Iranian people as well. In the blue, go ahead.
Thank you, Caroline. The White House posted the statement from the Iranian government that passage in the strait will be coordinated with Iran's armed forces. As of today, who controls the Strait of Hormuz?
Again, these statements were put out 12 hours ago. We expect that the strait will be opened immediately. As I said earlier, we have seen an uptick in traffic in the strait, and it's something that we are monitoring minute by minute, hour by hour as the days go on.
I'm asking who controls the strait right now?
One on the deportations of Iranian officials, and then on the negotiations. Are there still security concerns about Vice President Vance being part of these peace talks, Steve Witkoff, Jared Kushner? And then two, given the ongoing deportation of General Soleimani's niece, does the Trump administration plan to deport more relatives or people in the families of Iranian officials that are in the U.S.?
Certainly, anyone who is here fraudulently. I understand one of the individuals who their visa was revoked by Secretary Rubio and they were deported by ICE. They had a fraudulent asylum claim. That's against the laws of the United States. So anyone who is here illegally or fraudulently is subject to our nation's immigration laws and will be removed from our country. And I know this continues to be a top priority for the State Department, working in conjunction with the Department of Homeland Security. With respect to the safety of the Vice President, we fully trust the United States Secret Service to do their job, to keep the Vice President and the President's negotiating team safe. They do a tremendous job, and we fully trust them to do that.
Caroline.
In the back, go ahead.
Thank you, Caroline. The President has said Cuba is next. What's the message to the American people regarding Cuba, and what can Cubans expect in relation to this statement?
Well, look, I think when President Trump said that, and he later clarified after making that statement, that he meant the Cuban regime is bound to fall. The country is very weak. They're in a very weak position economically, obviously, financially. The Cuban people are fed up with their government, as they should be. And these talks and discussions continue to happen at the highest level of our government. I don't have any updates or announcements for you with respect to Cuba policy today. Good to see you.
Thank you, Caroline. Secretary Hegseth said this morning that U.S. troops would be sticking around. Can you expound upon that, what we should expect from U.S. troops in theater for the next 2 weeks and beyond?
I would defer you to the Pentagon for any specifics on assets that have been in place in the Middle East, but take the Secretary at his word, and also the President has reiterated this as well in his own words, that we're not going to move anything immediately. Again, this is a 2-week ceasefire where we hope at the end, and we expect at the end, we'll have a good agreement between the United States and Iran, but in the meantime, we're going to ensure that our military is always at the ready of the Commander-in-Chief. I'll take a couple more in the back. Sure.
Thank you. Thank you very much. Thank you.
On NATO, I'll take your question. Go
Thank
ahead.
you, Caroline. On NATO, can you tell me, is the United States still considering withdrawing from NATO? Is that still a possibility?
It's something the President has discussed, and I think it's something the President will be discussing in a couple of hours with Secretary General Ruta, and perhaps you'll hear directly from the President following that meeting later this afternoon. Thank you, everyone.
All right, that was the White House Press Secretary Caroline Leavitt, heard live on Bloomberg TV and radio, looking ahead to the meeting that President Trump is scheduled to have with the Secretary General Mark Rutte at the White House. 3:30 p.m. Eastern Time is when that is expected, and the press secretary did suggest we may hear from President Trump after that, as she did not push back on the notion that the president may be considering withdrawing from the NATO alliance, given his disappointment with it and lack of participation in this conflict in the Middle East. Of course, it would take an act of Congress to do so, but the press secretary went well beyond that when talking about the ceasefire, at least for this 2-week period that has been agreed to by the U.S. and Iran. She described that as a victory for the United States, and she said it was Iran that backed down, not the U.S. She also reiterated that it is President Trump's expectation that the Strait of Hormuz will be opened immediately, suggesting that even though Iran publicly is saying that it is not for oil tankers due to Israel's ongoing strikes in Lebanon, that the suggestions in private, she said, are very different. And on Lebanon, after we heard from the Prime Minister of Israel, Benjamin Netanyahu, that he made sure Lebanon would not be included in this ceasefire agreement, the press secretary did state that plainly. She said that Lebanon is not included. Obviously, that is something that Iran would like to see change, which underscores the fragility of this truce, which was emphasized as well by Caroline Leavitt. All of that said, of course, she did say that this ceasefire has been in place for now. Obviously, there's a lot of questions as we're still seeing strikes. She chalked that up to the fact that the U.S. has destroying a lot of Iran's military communications capability. But it's a lot of questions that we still have to be answered. And I'll be back for more on the late edition of Balance of Power at 5 p.m. Eastern Time. In the meantime, Fed Minutes are just ahead on Bloomberg Business Week Daily right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. It was what some would say was Taco Tuesday. We're going to talk about that a little bit later on, more on the war in a moment. But it's also a Fed Wednesday on this April 8th, 2026, because we are just seconds away from the minutes from the second Fed decision of 2026. Tim, that was back on March 18th. We've got a rally underway, though, and yields have pulled back ahead of this.
Oh, that's ahead of this. Think back to when that meeting happened, though. U.S. Treasury slumped, short-term yields soared to their highest in about 5 months. And we're getting Fed minutes in just a second.
And with that, off to Mike McKee. He's at the Fed in D.C. Mike.
Well, no surprise, the Iran war and tariffs were central to the discussion among Fed officials at their March meeting. The full effect of tariffs had not yet moved through the economy, officials said. A resilient economy, they called it. And the war, then only a few weeks old, raised the threat of inflation increasing and hiring slowing. Some participants judged there was a strong case for a two-sided description of the committee's future interest rate decisions in their post-meeting statement, reflecting the possibility that higher inflation might call for rates to be increased, although no member called for a rate move at that meeting. Most participants raised the concern that a protracted war could lead to further softening of labor markets, which would warrant additional rate cuts. But many participants pointed to the risk of inflation remaining elevated for longer than expected, which, quote, could call for rate increases. The vast majority of participants noted that progress toward the committee's 2% objective could be slower than previously expected, the minutes say. Labor market conditions appeared vulnerable to adverse shock, they say, most participants highlighting the risk that a protracted conflict in the Middle East could weigh on business sentiment and further reduce hiring. As for policy, most participants felt it was too early to judge how the war would affect the economy. Many participants judging that in time it would be likely become appropriate to lower the target range for the federal funds rate if inflation were to decline in line with their expectations. A couple highlighted, though, that they had pushed their assessment of the most likely timing of rate cuts further into the future. Stephen Myron, though not named, was the only dissenter. The minutes do note that one participant argued rates were still restrictive, and that was increasing risks to the labor market. Guys?
Mike, this is the moment where we sort of parse language here, and we ask you to translate what different words means when it comes to these minutes. The word protracted, that has to do with a period of time, a longer period of time. I go to that word because the Fed said that protracted war could hit jobs, warrant cuts. How long is protracted?
They do have a guide to Federal Reserve terminology in terms of some, many, few, etc., but they don't have a definition of what protracted means. Obviously, it would have suggested that the war could last for several months or longer. We're kind of in a middle period now. Hard to know whether this fits that model or not.
All right, Mike, we're going to come back to you in just a moment. Our Mike McKee there at the Federal Reserve. We're going to continue with Mike in just a moment. Do want to check on the markets in terms of what we've seen in terms of reaction, because, listen, folks, we saw a reset happening late last night into this morning because of what is going on, easing tensions, or so it seems, when it comes to the U.S. war in Iran. Having said that, as for the S&P 500, pretty much where we were prior to the release of these Fed minutes. Same story for the NASDAQ 100, just a little bit of a move to the upside. Probably more importantly is what's going on in the Treasury market. And I'm just taking a look all along the curve in terms of what we're seeing. And we're pretty much where we were prior to the release of those Fed minutes. So, maybe investors, of course, a little bit of I don't know. I think they're just focusing on the war at this point and maybe just kind of happy in terms of that happening at this point, although there are a lot of questions about that. Mike, I want to go back to you. I mean, will the Fed start to look through the war based on what we got? Or, we still have a lot of questions about what happens next.
too early to reach a judgment on that yet because the war has maybe not ended. We don't know for sure. We've had conflicting headlines all day. Most Fed officials who've spoken in the run-up to their next meetings, since the last meeting so far, have basically said the same thing that the minutes suggest, that there are increased risks to inflation that could come starting with oil prices and then working their way through the economy. They also note that tariffs had still yet to work their way through the economy, and we might get more. So there's a lot they don't know at this point, and I think the minutes really don't give us any more clarity since they were 3 weeks ago, and nothing has happened that gives us more clarity into the future direction of interest rates and oil prices and everything else at the moment.
The next move from the Fed, Mike, not whether it's going to, the Fed's going to just not change rates, but are people still thinking the next move could actually be higher rather than lower?
No, it doesn't appear that way. Right now, we don't have a good measure of inflation since the war started. Friday, we get CPI. That'll be our first real clue. And then we'll watch PPI the following week. We do get PCE inflation tomorrow, but that's for February, so it's not going to tell us anything. But the other two inflation measures will give us an idea of what the initial shock is. Now, we're already into April at the highs of gasoline prices, so we'll have to see if they stay elevated throughout the month, what that's going to mean for inflation. The word we get from oil companies and shipping companies is that this is going to take a while to work its way out of the economy, even if the war ended today. So they're likely going to be faced with uncertainty for quite some time, and I would imagine that we'll get a very similar meeting and minutes when they meet on the 29th of this month, because they're basically going to have to say the same things. Inflation could rise, it could become longer lasting, the labor market could weaken, but we just don't know yet.
Yeah, Mike, sit tight for a sec. We want to bring you into the conversation because here in studio with us, back with us, is Matt Lazzetti. He's Deutsche Bank chief U.S. economist, head of U.S. economic research, as we said, right here in our studio. Listening to Mike break it down. Good to have you back.
Great to be back.
What jumps out for you?
Yeah, I think Mike kind of highlighted things, and actually the note that he was talking about where the Fed goes through their account numbers, I had it up in front of me, and I think the one thing that sticks out, back in January, several Fed officials were pushing for this two-sided language. They wanted to open up to the possibility that the next move could be a hike, in addition to being a cut. At the March meeting, it looks like this group grew a little bit. So now some, rather than several officials, are in that group. Some in the Fed's lexicon is actually more than several. So you do see that group as growing. Now, Chair Powell at the meeting in March didn't actually note this. He didn't push that. He was asked about it specifically. So I think you've seen that group grow. Now, the minutes always can be stale, right? They're several weeks ago, especially in an environment where things are evolving so quickly.
But sometimes I love it because it kind of just reminds us, okay, here's where we were before some of the craziness. And then, do we get back to that, or does that craziness, Matt, affect us longer term, stay with us?
And it gives you a sense of, how hawkish were they, for example, before we got a much stronger jobs report, which could have alleviated some of the concerns about downside risks to the labor market. And so that context matters a lot.
Do you want to ask Mike a question?
Mike, from the minutes perspective, do you see a sense that the Fed could be opening up more to rate hikes as we look ahead? I like the question about protracted nature. I thought that was really giving the Fed optimal flexibility and optionality to respond however they might want. But your overall read of the minutes, is the Fed inching closer to potentially this two-sided language? Do you think they adopt that at the April meeting?
I don't think they will. It'll really depend on what happens with the inflation numbers. They could, and you're right, we have seen more people talking in that area. I think the sentence that you highlighted, the other part of it was in the January meeting, some members said they could support the idea of a two-sided explanation, and this time they said there was a strong case for it. So what that tells me is that probably the case is going to be stronger for no move, and that the people who wanted to cut are going to be fewer at the next meeting because they still don't know, and the risk is a little more two-sided. But I can't say that it really sets them up to raise rates at this point because, in theory, things might get better by then.
It's like, honey, I said some. No, I meant more. Like, I don't know, the nuances. Hey, Mike, before you go, last thing on your mind when you think about the U.S. economy, so much coming at folks. I can't wait for earnings. I want to see what CEOs and the C-suite has to say about the outlook if they're willing to commit. But what's top of mind for you here?
Well, you make an important point about earnings and what CEOs say, because they do note in the minutes that tariffs had caused companies to stand aside and not make decisions, and that continued price increases from the war could cause companies to cut back on hiring. Mm-hmm. So those are the kind of outlooks we'd like to see from the CEOs that will give us a better idea of where the economy is going. But overall, what I take away is that the Fed officials are just like the rest of us and the folks on Wall Street. They don't know what's going to happen, but they stand ready to respond in whatever direction with whatever they can do to help.
Which is kind of what you want in a central bank. All right, Mike, you can come back home, so we'll be welcoming you back. Of course, our Michael McKee, Bloomberg TV and Radio International Economics and Policy Correspondent, but still with us, Matt Lozzetti. Matt, fundamentally, how is the U.S. doing? Like, when you think about it.
I think if you take a step back and you look at the incoming data, we have an economy where growth has been very resilient. You know, the economy has experienced abnormal and historic shocks over the past 12 to 18 months. And despite that, the economy has been continuing to grow at 2% or above. The labor market, extreme volatility in the month-to-month readings. But if you look at the unemployment rate today, is about where it was last summer. It's still at historically low levels, almost 4.2%. Most measures of labor market slack are very stable. The hiring rate has been stable. The quits rate's been stable. And so despite all the worries, despite the fact that we are experiencing the significant adverse shocks that are putting attention to the Fed's dual mandate, the economy is actually performing quite well.
The economy is not monolithic, and there are different parts of the economy. And the way that different people feel this energy shock is a lot different. We spoke to Chris Britt, the CEO of Chime, last week, this neobank or fintech, whatever you want to call it, where the average income of the user is about $75,000. He said his consumers' fuel spending rose 25% over the last month as a result of the war with Iran. What does it do when that consumer is hit so hard to your outlook of the U.S. economy?
Yeah, you've had an economy, and part of this is always the state for the U.S. economy, which is that it is heavily skewed in terms of the impact of consumer spending towards higher income households that drive a disproportionate share of consumer spending. Now, the shocks that we are seeing tend to be regressive. So they're hitting the middle and lower part of the income distribution more. So they're raising fuel prices. They will be raising food prices most likely. The tariffs that we've seen impact goods more than they do services. So all those are negatively impacting the lower part of the income distribution. That part of the income distribution is generally always more fragile, but has been shown to be more fragile in an environment of higher interest rates, higher inflation that we've seen. But if you take a step back, all of the aggregate spending data still looks quite good. Consumer spending looks relatively solid. From a business CapEx perspective, yesterday we got durable goods orders and shipments, which remain pretty solid. So there's still these kind of distributional concerns about the consumer and the broader economy. But on average, in the aggregate, things look very resilient.
So we keep talking, Matt, a lot around this table about the longer impact of the war. And I can't remember if
protracted.
Protracted.
In the words of the Federal Reserve.
Yes, exactly. But I just think about, and I can't remember if we've talked about this yet with you, is that this idea that you have nations thinking about what they need to protect domestically for their national security. And so producing more at home, making sure they have access to raw materials. I don't know. I'm obsessed with this about the rethink. And I do wonder if that's factoring into your models longer term. And with that, I think about labor costs in here, that would make things probably more expensive here. Even if you take out the moving stuff around costs, I just think about what that does to inflation longer term.
Yeah, so I think there's probably two aspects of this. One is supply chain resiliency, and it was a key topic coming out of the pandemic. And maybe we've forgotten a little bit about it over the past several years, even though you had this historic tariff shock.
Yeah.
But what's happening over the past month certainly intensifies those concerns. Now, it might mean that you have to invest more across multiple supply chains. You incur more costs because of that, and therefore, yes, you're more resilient, but at the same time, your average cost is higher. And so that could feed into inflationary pressures. The other part of this is how are people thinking about their own defense? And so, can European economies rely less on the U.S. for defense? I think certainly we've seen Germany take a strong stance on that position, significant investments in their own defense industries and infrastructure. And that will mean globally fiscal policy is more proactive than it has been in the past. And because of that, inflation will be higher. As
guns versus butter. Like I'm
Correct.
thinking about the impact on what that does for society.
Correct. I think ultimately it will squeeze out and push out some of the private sector. Will overall raise interest rates, keep interest rates higher, and inflation higher.
When we talk about a duration of a conflict like this, I think there's this idea that we're in a period where a ceasefire has been announced, but it's clear that things aren't going back to what they were before February 28th. Oil's not there. Maybe the excitement about what it could go back to is there, but there's still skirmishes happening, and there's still negotiations to be had. Is there a chance that the war may not look like it did in the first 5 weeks, but there is still a heavy presence by the United States and Israel in the region for a long time to come, and that affects the economy?
Yeah, I think we have to think that there's still uncertainty here, right? We're in day one of what is still an uncertain truce at this point. And so, how the world looks 2, 3, 4, 5, 6 months down the road remains highly uncertain. I think it is very likely that energy prices are just higher than they were before the recent events. In part, that's because even if the Strait of Hormuz picks back, reopens fully, and we're clearly not there yet.
No, oil transit remains halted now.
Correct. So we're clearly not there yet. But you've had some damage to energy infrastructure in the region, which is absolutely critical, and that's going to take longer to get on track. So I think regardless, you are likely in a world where energy prices overall and therefore inflation for this year is going to be higher as a result. Now, I think the U.S. economy can absorb that, and I think that it can be resilient in response to that. I think if oil prices were to move up to $150 a barrel, that's the period where we became really worried that it could wipe out the benefits of tax cuts to U.S. consumers. You might get into nonlinear effects on the economy where growth begins to be more damaged. So, yes, I think it has lingering effects on inflation. I think that impacts the Fed in a hawkish direction, but it doesn't necessarily overturn a relatively resilient view for the economy.
Matt, I want to throw one more thing. And, before the war, every conversation either started or somehow worked its way to artificial intelligence.
Yeah.
And you guys have done a lot of work. Certainly, we've talked a lot about the potential impact on the labor market, but you guys also did a recent note on AI's maybe impact on inflation. What did you look at and what did you guys find out?
Yeah, so I think if you think back 6-7 weeks ago, the entire conversation in markets was about how AI was going to be disinflationary and was going to displace labor, both of which was going to put downward pressure on inflation and on interest rates. Now, obviously, that's completely gone away from the discussions at the moment. But I think there's just this very strong conviction in markets that AI is this massive disinflationary force. One thing that we did is we actually just went out and asked various AI tools whether or not they think it is going to be disinflationary.
Did the tools explode?
They did not explode.
Okay, that's a good sign.
And people, they joke, yeah, of course, if you ask Hal whether or not it's going to take your job, it's going to tell you no. But
I'm sorry, Matt, I cannot answer that for you.
Just got about 40 seconds.
Sure, but from the inflation perspective, I thought you found really interesting results. So AI is not at all convinced that over the near term it's going to be a disinflationary force, and it highlights, I think, key factors. There's a big investment boom that's taking place. It can add upward pressure on energy prices.
Yeah.
But even if you look over the next 5 years, it puts about an equal probability that AI is a significant disinflationary force to it lifting inflation. And again, it's kind of highlighting a lot of these supply chain issues and the investment demand part.
By the way, one of our favorite things, maybe it's just mine,
Yeah.
hey, do you know who Tim Stanovic is? Do you know who Carol Messer is? We get all kinds of crazy answers. Matt Luzetti.
We know who Matt Luzetti
We
is.
certainly do. Deutsche Bank Chief U.S. Economist, Head of U.S. Economic Research. All right, when we come back, we're going to talk clothes, retail. We're going to talk Levi's with the CEO.
It's 2:21 on Wall Street. I'm Amy Morris. Markets feeling optimistic after the U.S. and Iran reached that ceasefire deal. We check markets for you all day long here at Bloomberg. The S&P 500 is up 2.3%, NASDAQ up 2.75%, and the Dow up 2.5%. The 10-year Treasury yield at 4.29%, and the 2-year yield at 3.78%. Both WTI and Brent crude bouncing around $95 per barrel, pretty much where it's been all day. Fed officials considered differing scenarios for the economy following the war in Iran, including interest rate cuts and rate increases. Now, most officials worried that the war would hurt the labor market and warrant lower interest rates. Many policymakers highlighted the risk to inflation that might warrant rate increases. Moody's Ratings cut the outlook on Blue Owl credit income to negative after significantly higher than peer redemption requests in the first quarter. The private credit industry is facing an investor exodus amid concerns over lax lending standards and a failure to clearly explain liquidity restrictions. Moody's expects elevated redemptions to persist in coming quarters and slower inflows. Blue Owl shares about 1% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
All right, Amy, thank you so much. Yes, indeed. We are here at Bloomberg headquarters in New York City. Well, thank you, Harry. Thank you, Hulu. Thank you, FX. Thank you, Love Story, and more. We want to talk about Levi Strauss & Co. Company's latest results really knocking the socks off investors. The stock is up the most in 1 year as the company raised its projections for the year after reporting better than expected quarterly results. They cited strong demand in all regions as the denim brand steers shoppers to its own stores and website. We're going to